Well, a couple of things I wanted to talk about today. One is what we've been experiencing the last 3.5 years in the exchange space and in Bitcoin, but also about the digitization of assets in general in the marketplace. So we had some talks yesterday about the differences between the public versus private versus federated sort of view of the world, and I think there's a place for everything. But let's take a look and see what we see. So I need the clicker. Here it is. Very good. So quick company background, and then we'll move right on to some views on the marketplace for the most part, and then about the digitization of assets in general. So the company was founded in 2013. We've been here year after year, which is great. It's nice to be back. It's the first time for me. We have a pretty strong team of people that are mostly capital markets people, so they do come out of the banking world, but they're advocates of changing the world as well, so we have some pretty innovative people working with us. The company is growing. We're adding even 3 this month, so things are picking up. We have about 20 customers around the world. We started 3 years ago with exchanges and helping to launch Bitcoin exchanges. Of course, that's diversified a bit, and the technology's grown, and we begin to do more and more things. The main one being to move into the blockchain space for the enterprise as well, so I'll explain some of that. Right now, we have about $1 billion in transactions running over the platform, which is fantastic to see, and I think we've all seen the volume increases. So just some quick sort of looks at slides. I think we've seen a lot of this data already, but we are seeing a very good increase in the total amount of Bitcoin down here at 80, or a total volume history of 80 billion last year and 626 billion this year, which is terrific. But you can also recognize that real numbers coming in for trading is about 9 billion and 80 billion. And what that means is that per day, it's increasing as well, which means more population and higher rates. So the other part of this is to look at the market capitalization. And I think that's all very important to us as an industry because we want to be recognized by the parties that exist, as well as for ourselves and our own well-being, that it is 15 to 20 billion today. So non-Bitcoin is certainly growing, and we saw some speakers yesterday talking about their spaces, and I think that's going to tick up a lot as people adopt various new platforms. But I do see that Bitcoin itself right now is still about 85 to 90% of the data, of the other size transactions. So a lot of what we did in the space for the first couple of years was actually launch the exchanges and help people begin to trade and move this. But we're seeing more and more people come on board who are ex-capital markets people and bankers, other people with a lot of industry knowledge from practice, and who are doing more and more things. So they're transacting different currencies, and they're moving into other asset sets. But what makes it hard for these big Goliath organizations who sort of stand in our way as consumers and as small businesses to do the job? And part of that is that they're changing their business model because they have multi-silos, they have legacy systems. It's not as easy as just starting a Bitcoin exchange and moving all their currency to that. It's more about other types of assets as well. So part of what we recognize is that it's costly to digitize these things. It's difficult to launch into new markets. It does cost them marketing dollars to change how they do things. And there is that issue of trust that we all recognize so well. Some examples of things that we're working on and seeing are, you'll see, for example, that the CME just announced with the digitization of gilt with the UK. And that's a big deal because you've got now a major exchange player across the planet who's digitizing a national commodity, gold, and allowing it to now flow more freely, not just in the existing channels, but to people like me who can now buy fractional amounts of this precious metal and not actually have to ship it to me and have it land in my pocket. So these things are going to continue to grow, and I'll show you some examples of why and what the emphasis is in dollars spent in getting there. Another idea, just to think about it for a minute, is the things that we own, homes, art, anything of that nature, is very, very important to us, and yet we have a lot of cumbersome things in our way. What do we have? If I have a piece of art, I don't have a Monet or a Renoir, but let's just say I did. There are some people in Switzerland and other places that do. They have to go through lots of really cumbersome processes, just as we do to get even car insurance or insurance for our house or something of that nature. So what they have to do is deal with the insurance company, partial ownership of that, lending of that to museums and other things, and jurisdictional changes around where it's recognized for tax purposes. These are all ugly, ugly things, and we'd rather, I think, as humans, not have to deal with all this. But that's not going away tomorrow. So the first start is to give the institutions that are managing this for people the ability to manage these more efficiently, with less cost, and with a lot less middlemen in the way. And then we also see a big trend in commodities in general. So oil, natural gas, these kinds of things where commodities vendors and banks, as well as the buy side of the institutions, are digitizing very significant parts of the market. So all that being said, one of the things that we're seeing both in Bitcoin and blockchain is a lot of investment. We had VCs here yesterday, maybe some today still. And there's a lot of money going into this, which is good news because it gives us the ability to capture this market faster and help us to free up what we want to free up. And this chart on the left is really just showing that the comparison of the internet investment, which was pretty massive in the late 90s. And we've already surpassed that amount in our spaces, in Bitcoin and blockchain distributed ledger technologies. And it's not just the US or one particular place, it's all across the world, and it's happening quickly, which is all good news. So some examples of what people are saying. So when these kinds of people like the World Economic Forum says that it's going to change GDP, or central banks start talking about it saving as much as 3% of GDP globally, it ends up being a pretty important factor in decision-making for the big institutions like banks. And the Bank of England is obviously well recognized for what they say. One of the things that we saw people focus on early, and I'll get into this a little bit later, is that they're trying to sort of boil big oceans, which are sort of back office processes, these ugly things that we have to deal with as traders inside banks and buy side and as consumers in our wealth management. That in itself could save $20 billion in the process. Will we receive all of that extra money? That's the question. But we hope at least that we get a break on having to pay these banks for these massive processes. But we are helping with this sort of process as well. So it's a pretty big deal, and it's moving, and whether we like it or not, these institutions won't go away tomorrow. What we need to do is move them down that stream much faster, and that's part of what we're doing in addition to working on the Bitcoin side of the market. So it was funny, Roger, I had some quotes in here, by the way, that are coming up, and I just thought they'd be fun to share because I heard them yesterday, and they're controversial, but I think there's a way to talk about the marketplace working in both ways, both on blockchain distributed ledger and digitizing the assets for the big institutions or even the small institutions, as well as Bitcoin in and of itself as a currency and as an asset. And we do see that there is inside each one of these banks a lot of movement forward in trying to turn things to blockchain. And one of those issues around that we mentioned in the previous slide that are impediments to that is also interoperability. So our previous speaker just mentioned this as well, which is our platform is open. We talk to Ethereum and other ledgers. We're building a lot of workflow and application on top to help people do their jobs. And every job is different. If you're a wealth management firm, it's different than being an FX trading firm, is different than being a back office processing firm like a Broadridge or something like that. So everybody needs a little bit more workflow in order to fit into this model of using distributed ledger. But we do want the world to congeal around the original founding ideas that Satoshi had. So there's a lot of money going in. And these guys, this was just 2016. I think that number is 2 billion. And these are some really big names. So everyone from DTCC, who's the repository for swaps and other assets in the US market, CME, a big global exchange, and NASDAQ as well as the big name banks and some smaller players as well. So I put these quotes up here, and I did write them down specifically when people said them. I'm sure I'll be quoted later. But I think there is a place for each one of these, and the reason that we're approaching this market this way is that we do see the opportunity. There's a lot of white space available, but as long as we remain interoperable and are able to talk to the other platforms, we can begin to deliver the dream that I think that we've all sort of looked for. So in the view of, as Marco was saying, there's a sort of a public view and a private view, and then there's the federated view in between. A lot of what we're seeing at the banks right now and the buy side and the exchanges is how do I federate my view just with my current customers? I really can't because of regulation. Whether they like the regulation or not is a different story, or whether we like it is another story, but it's not moving anytime soon. And in order to fit within that regulation, they do need to be able to put controls and own some of this process themselves, while our software remains interoperable with the rest of the world. So just sort of quickly to show sort of where we see the market and one way of looking at the capital markets industry, this can include insurance, is to think about the sell-side banks who issue new notes and new products and instruments, but they also have their own wealth management and other components. Buy-side hedge funds, asset managers, pension funds, and the like. On the right-hand side, I've put intermediaries, but that means exchanges, it means the DTCC, it means other players in the market that facilitate the movement of assets here. And on the left are vendors. This could be Bloomberg, it could be S&P, it could be anybody like that who are big vendors that supply this market with transaction capability, with valuation capability, with communication capability. And somebody mentioned yesterday, I don't know whether it was Sean or not, mentioned boiling oceans. And I think what we're seeing is that the two major players in the space of blockchain distributed ledger are R3, which is this group at the very top on the sell side that have created a community around 50 banks or so, some of whom have left. But that's a big deal because they're trying to get all of them to agree all at once to all these processes for just back office processing of derivatives, OTC derivatives, which is a whole other realm. So that's a big ocean to boil, and we think they can have at it. But what we're going to do is keep working with each individual one of these players and helping them with what they want to solve individually. And then intermediaries as well, exchanges, well, we've been in that space a long time. There is one player trying to boil that ocean by themselves. We're going to go individually and help each one with their own processes. And then we can grow because of the interoperability in between. And this is a pretty massive market in capital markets. So one way to look at the sort of use case as well as the opportunity space is to think about an institution like this being front, middle, and back office, which means all of the things that go with that. So in front office, you have sales, marketing, decision-making, investments. Middle office includes risk management and a whole number of other things. And back office is processing and all of the ugly pieces of paper flying around that shouldn't have to fly around, faxes and nasty things like that. Function areas will include things like wealth management, trading, risk management, these kinds of different groupings. And process areas could be, I'm in IT, I still have to support the guy in the front office doing trading. We're all part of one big stream inside this cube. What we're seeing is a lot of the boil the ocean that people are trying to do on a community basis are way in the back of the cube, on the bottom. And what we're seeing is people are willing to begin to pay and begin to move their organizations in a pretty structured way to solve these problems in the front office and the middle office where there's already assets and money, and where they have problems for customers. And a lot of them are listening to their customers. They're saying, I'm hearing a lot of pain out there. Our old processes don't work. We're losing to our competition, and then they circle around because the competition has the same problems. And so that's part of what we're really trying to solve is that issue. I think I'll leave it there for now and go to questions. I've covered a lot of territory and not been too specific. Why don't we start there? Yes? Yeah, so there's one example thank you. So he would ask for an example of people going into production in the front office. So where are people actually deploying distributed ledger technology to use, what's the use case and what type are they? So a couple. So insurance is very much like a bank, right? They have the same kind of processes and do very similar things in a way. We're working with a very large insurance company that we've digitized their life insurance policy process. So I say I have a life insurance policy. I also know that if I die, for example, I want my will, my other assets and processes to be part of that flow so that my wife gets this and my children get this and I know when this happens. But right now, that process involves calling the accountant, calling the lawyer separately, making sure the insurance company knows what you're doing, checking the provenance of all of these things like wills and birth certificates. And we put all that into a digital asset management application for both the end user on the phone as well as the insurance company itself. And because of the nature of distributed ledger, people can say, the insurance company can say, I don't want to see everything you put on your phone, nor will I, but I do want to see what we do with your life insurance policy. And so we've built a user app that the user can even upload pictures, their son's birth certificate, processes contacts for their lawyers, but the insurance company doesn't need to see that and doesn't, but they do see what happens with the life insurance policy when you expire. So that's one example. Another one is, I would say, so I can't say too much publicly, but let's talk about digitizing an asset like gold, where someone on a global basis can now take that metal and not have to move it from facility to facility to vault across the planet, but can also then fractionalize it to a point, they can stay in that one vault, fractionalize it and have you own it. So those are two interesting examples, a couple more.
Just a quick question. You just brought up insurance 5 seconds ago. And New York State, I saw you're in New York, are going to start having the new regulation coming up in March about the cybersecurity and all that coming up, which is based on top of the right, they use the bid license for their rule of this new regulation coming up. How do you feel that your product will be tied, number one, to the bid license decision that's coming up on, the bid license?
I'm not highly familiar, but I know what you're talking about.
And how will it impact the second regulation that is coming up on March 30 with your product?
So I don't have, yep.
There is 2 questions actually.
Okay, so I'll try to start, and then if I can't answer it, I'll give. So I'm not the technologist on the staff, so I won't be able to answer it in the detail you want probably. Nor have I looked at that regulation myself. So I would say one thing is this is a private use. So if between client and the custodian themselves, not across the universe of all insurance companies necessarily. So it depends on the use case specific, and we keep getting down to that because we sense that having started with Bitcoin, it's everybody sees everything, and that's not how it's going to start. So when it comes to security, generally speaking, if you can contain it in the walls and at least let them start there, because these organizations, it takes them forever to change.